Let me check if everything is all right, yeah? Wait. Yeah, it seems like everything is all right. The sound is good. The screen is showing perfectly. And we will see if we shall wait for another 4 minutes to get started. And today we'll be talking about Gold CFD. And I will share about all of my trade last week so that you guys can know how do I do an analysis on the Gold CFD, and then let's see on the result. Either I'm in profit or I'm in loss for last week. If any of you have any questions or the sound is not clear or the screen is blurring, then you should let me know, yeah? Then I'll adjust a bit. And I'm not sure whether the connection is all right, so yeah, we shall see about that. It seems like there is some delay in the streaming, but I believe that at least the screen and the sound is synchro, so it shouldn't be a very big problem for that. I wonder how you guys doing lately, because recently there's a lot of user that approach me and say that they have their positions, which is what we call the underwater positions, trapped in quite a high level and wondering what to do. So if you are seeking for my advice, I would say that probably you can consider to use options to just gain a little bit back bit by bit. Like if you are holding Tesla, maybe you can just put a sell call at maybe some level high above your entry, and you can just keep collecting the premium until one day that it recover back to your positions level, and then maybe you can just quit that positions with a very good profit. This is how you deal with options when you have the share on hand. Unlike the normal options trading, which you only have cash and you don't have any share, and at that time you are only trading the difference in between the premium pricing, which you are buying at a low level and then sell at a high level. And if you have the share on hand, then it will be total differently play, which you can just keep on collecting the premium, like renting out the house, something similar like that. So we shall wait for another 2 minutes for the others to get in, then we will get started on today's topic, which is the gold CFD. And personally, I'm actually trading quite often on gold, and I basically do it like a day trader, which I do not hold the position overnight, and I just trade within the day. And hopefully you can learn something from here. And for last week, I did quite a pretty result, but this week so far is negative. So until now, so actually we are open for discussion. So if anything If any of you have any questions or you have any suggestions, feel free to just speak up. Okay, so let's start on today's topic on the gold CFD. So actually, when we talk about CFD, you can trade CFD on many things like forex, commodities, index, or even share. So it's up to you that what you want to trade with, but majority of the player will go with gold or index. So this will show you how a gold tradings will look like. So this is actually a video that I took that recorded all of my last week trades, which you can see from down there. The date is February 25. And you can see that for the first one, I make some profit. But for the second one, the red button is the sell button. So I sell at this level and I sell high and buy low. So for the first trade, I make some profit. But at the second trade, I lose some back to the market. But you can see that the range is very different, which I would say that this day is closing in profit. And you can see that how everything is going last week. So the second day, you can see that on February 26th, my first trade end up losing, and my second trade actually end up in profit. And you can see that the profit in the second trade can cover all the losses in the first trade and even give me some profit back. Let's see how am I doing on the third day. I didn't trade on the Monday because I only do it as when I have the free time. But yeah, so when I do not have the free time, I will just focus on the job instead. So on this day, you can see that the first trade end up winning, and I lose for the second trade, and the third trade is a win also. I will just analyze it bit by bit later on. And also the Friday is the last day, and yeah, also three trades, two winning and one loss. So this is actually how a gold trading will look like. And you can see that this is a M15, which means that one candle is actually equal to a 15 minutes candle. I believe that every one of you know that what does this means when if you just familiar with the chart and also the technical analysis. So for today, first of all, we will talk about the CFD core concept, which is the basic for every one of you if you don't know about what is CFD. But we'll just go through it very quickly because we won't talk about how to do the mathematics, how to calculate your risk, how to calculate your loss size. So I will just focus on the analysis part so that just like our topics say, I'll just focus on the analysis and try to make every one of you become profit later on. So for the theory part, you need to do some own research and you need to do some own homework to profit lah. So the money doesn't come to you that easily. So be aware of that, and we will go through the basic part, the theory part very quickly. So the second part is we will talk about the key factors, what will make you rich and what will make you broke. Just like today, if I'm not mistaken, today there will be a news. Let's see. So today there's actually a news on 9:30, which is the unemployment claim. So actually this kind of news will affect the gold price a lot. And if you are a day trader, you might need to avoid that. So let's go back to it. And for the third part, we will go through all of my last week trades all together. So hopefully you guys can learn something from it, or maybe you can just able to learn my way of thinking and put yourself in my shoes so that you can become a profitable trader too. The first one is the core concept, which is the basic that you need to know if you are a total beginner. So I will just talk about what is CFD very quickly. So CFD actually stands for a contract for difference. So what does it mean? This is actually a leverage tool. So there's actually a leverage effect here. So if you don't have the enough money to buy a gold, but you can just buy the CFD contract instead because there's a leverage effect there, but you need to be aware of the risk and you might get margin call if the risk go too high. And second, you do not hold any asset. Just like what the name say, this is actually a contract for difference. So actually you sign on the contract to trade on the differences between the pricing. So you buy the contract to profit from the price difference. So basically you do not hold the share. You just sign on the contract with the other parties to just profit from the price difference. And what does it bring to you? You can actually trade both directions. So unlike the normal share buying, you can actually do long and also do short. Let's see. This is the cost to consider if you want to do for a CFD. So the first one is the spread. What does that mean? A share is a spread is that actually there's a price difference in between the bid and the ask, and you can actually normally the spread is will be between 1 to 2 pips. So you might need to consider uh, to check on the spread of the platform that you provided and to avoid all those platforms with a very high spread. Because if the platform have a very high spread, it might hit your stop loss even though the price doesn't go there. And the second thing is swap. Swap is what we call the overnight fees. So if you hold a position overnight, they will charge you an overnight fee, which is what we call swap. So if you are only a day trader, you do not hold any position overnight, then it is not your business. The third one is the slippage. What is a slippage? Slippage is like when I want to buy in the CFD, let's say I want to buy in the gold at 2,000. And when I click the button, it didn't buy at 2,000, but it buy on 2010 instead. That is what we call a slippage. So the price actually slip a bit, and then will cause you to buy at a very high level or a lower level compared to what you want to buy at. And four is others. So it depends on the platform that you trade for CFD. Some platform will charge you some other fees, but it all depends. So actually, Usmart also provide CFD for you guys to trade. So you guys can actually trade the CFD for share, index, forex, and also commodities. And especially for gold and silver, this is actually a very good tool to trade with, and you can make use of the leverage and the margin to profit from it. Let's see that how much you can possibly lose. Before we talk about the profit, we need to know that how much we will lose. Actually, this is very simple. You only put the money that you can afford to lose into the account. So that is the total amount that you will lose. Even though there's a leverage and a margin, and you may get a margin call, then if you want to just keep your position safe, you might top up. But if you already pre-plan the risk in advance, then you can just leave it, make it to just close your position. Just like what you say, hit your stop loss instead. So you only trade with how much you can afford to lose, and you only put that amount into the account. Second thing is the key factors. What you need to avoid when you are trading gold. Actually, it's very simple. The first one is the market driver. The first thing is the monetary policy, like the rate decisions. When the rate decision is made and it will just affect the US market. Actually, gold, today we will only talk about gold. So actually, gold have a core relationship with the US market and also the US dollar index. Why am I saying so? Because when the US market is doing great, then most of the money will just transfer into the US market instead. So when the market is doing bad, that is the time where the gold start to climb up. So they trade the gold like a risk adverse tool to just trade with. And the second driver is the geopolitical risk. So do remember one thing, if there's a war, then gold price will go up. It's very simple because when there's a war in between some country and their currency will become depreciated or even will become just a paper at last if they lose their war. So what the people there will do is they will try to make their money valuable. So what they do is they buy on something like gold. So when they buy on gold, even though if the country is loose, they can just bring the gold and then go to the other country and start over again. So gold is actually a very good media to just transfer your asset. And the third market driver is DXY and bond yield. When I'm talking about DXY, it means that the strength of dollar index. So whenever that the US dollar goes up, gold price will go down. It is in an inverse correlation. Then the second factors that you need to pay attention to is session, because there's actually gold actually open for 23 hours and for the weekdays, and you can trade for different sections. Like if you are in Malaysia or Singapore, then the Asian sections will be on 8 a.m. at the morning until 1 p.m. in the morning and in the afternoon. And then the London section will start on 3 p.m. instead. And then for the New York, it will start on night, just like the time when the US stock market get started. So what is the factor that will lead you to either rich or broke? First one is the risk. So whoever that make the most in the market is not the winner, but whoever that stay until the last is the winner. So you need to make sure that the risks that you put into each position do not exceed a certain limit. Keep your positions, keep your portfolio safe first, then we'll only talk about making money. And the second thing is analysis. How good is your analysis skill or how bad is your analysis skill will determine if you are a good trader or not. And the third one is discipline. So you need to just make use of the same system to just keep on trading for the same system to verify if that is a good system that can make you profitable or not. If you just keep on changing the system or what we call the trading strategy, then you won't have the answer at last. You will just keep on losing up in the path that's seeking the perfect strategy. Now we'll go about a case study. We might spend some time here. So this is the result for my last week. When I'm saying +1R, The R here is meaning the risk to reward ratio. So if I'm saying plus 1R here, means that if my cost is 100, then my profit is 100 too. So if my cost is 1,000 per hand, then my profit will be 1,000 too. So you can see that this is my result for last week. On Monday, I didn't trade because I'm busy at work. So for Tuesday, I make a profit of 1R, and Wednesday 1R also, and Thursday 3R, and Friday for 2R. So you can see that the total for last week will be 6R, which means that if I have an account with 100, then actually I can just flip my account into 700 after last week, because I used the 100 to just keep on making 100 for 25, and then another 100 for 26, and another 300 for 27, and another 200 for 28. This is what the meaning of R, risk to reward ratio. So let's see about February 25. What is the analysis that I do here to make me this result? So let's go to the chart all together. Yeah. Before that, let's take a rest. It's a little bit cold in the office here, so you might see my sound is shivering. So February 25, let's check on that. Mainly, I'm actually using only 30 minutes and 1 hour to determine the direction, and using 15 minutes for the entry. Okay, so if you guys are ready, then here we go. So you can see that on 25 actually start on here. And what did I do to make me these two trades? And you can see that my trades actually is these positions and these positions, which equivalent to, let's move this to 25 also. Which I enter here with a stop loss above this red candle, and I make a 1 to 2 risk to reward ratio. You can check on here the risk to reward ratio. 1 to 2 risk to reward ratio is that when it hit my stop loss, I will lose for 100. When it hit my TP, I will make 200. So if my cost or my principles is 1,000, that will make it will lose 1,000, and then will win for 2,000. So this is my first trade, and this is actually my second trade. But my second trade end up losing, and actually there's a chance for the third trade, and we will go through it bit by bit. Why am I doing this kind of positions? So let's get back to the first thing. When we are doing trade, the first thing first is determine the direction, or what we call the trend. Second thing is the entry, or the entry model. Third is the risk to reward ratio. So let's see on. The first thing first is the direction. Whether am I going to do for long or doing for short? So actually my way of doing things is very simple, because I'm only using a naked chart without any indicator to determine the direction. So first of all, what am I doing is that you can see clearly that this is an uptrend. If you know about what is higher high and higher low. So this is clearly an uptrend because the lower point is moving up and the higher point is also moving up. Higher high, higher low, higher high, higher low. So this is actually an uptrend. So for 25, what happened is that the uptrend here start to breaking up because when it is having a higher high and higher low, it start to have a lower high here. You can see that this low is actually much more lower when comparing to the previous one. And when you make a high again, you can see that this high is also lower than the previous one. So when it is in this method, when it's moving like this, it is clearly that the direction has changed because this low is now a lower low when comparing to this one. And then this high is actually a lower high when comparing to this one. So when this thing happen, you can see that there's actually a sweep of structure happen when it break out on this level. So when you break out of this level, the direction will become bearish until when it break up this level and it will make a higher high. If it break out this level, then it will just change from a bearish view to become a bullish view. So when I'm checking on the chart here, I only focus on doing the short trades. So there's only two methods for me to get in my position. Now I have the direction, which is bearish. And now I need to find a way to entry. So my way of entry, there's only two methods. First one is short at resistance. Second is breakout and retest. As simple as that. So when I'm checking on the chart, the first resistance I will have is actually on this level. So when I'm checking on the chart, this is what I will do. Either I'm waiting for the price to come back at this level to make me have a short, or either I will wait for it to break out, retest, and continuously going down. So when I have the resistance here and have the support here, this is what it happened. The candle just break through the resistance directly without any testing. So now this level of resistance is not valid anymore. And what it formed is that it formed a red candle here, which make it a new resistance. When you make a new resistance here, I'm waiting for a retest and a confirmation. And this is what we call a retest on the resistance and a confirmation. So this is where I get in my entry. With the stop loss just above this candle and have a risk to reward ratio of 1 to 2R. And after 2 hours and more, it hit my profit there. And then what happened is I'm actually looking for a second entry, which is the break and retest. And it break out of this support level, come back and retest on this level and close with a confirmation. So this is where my second entry located at. But this end up losing very quickly. And actually there's a third trade available up above here. It goes up to the resistance again and have a confirmation here. And this one go very smoothly, but unfortunately, I'm driving at that moment, so this trade actually missed out. So for this day, I make a profit of 2R here, and I lose a losses 1R here. So for this day, it's a plus 1R, which means that if I'm using 100, I make 100. If I'm using 1,000, I make another 1,000. Okay, so this is what happened on Tuesday. So if you guys don't have any question, we will just keep on moving forward and we'll see on what happened on Wednesday. Let's see. On Wednesday, it's very clearly that this is actually in a downtrend. So what happened is that actually you can see here. This is in a downtrend, lower low, lower high, lower low, lower high. So actually I do waiting for it to break this one for a break and retest, or I'm waiting to just short at the resistance. And what happened is when the price is at this level, it doesn't go to this resistance instead, but it make another resistance here. See, it make another resistance here, and this is what we call a break, a retest on this resistance, and it closing back to this level. So just like what happened here, it retests on the resistance and closing back. For this one, it retests on the resistance and closing back too. So this is my entry play along. So the first trade goes in this way. But actually, it do happen to have a break and retest on this level. So actually, I have two trades for that day. The first trade is actually end up losing, where the break and retest happen here, and I get into these positions and I lose for this position. But afterwards, I get back again to make this 2R. So the first position is actually here. So yeah, we go for a very realistic player. We do not do for a demo account or whatsoever. So the first trade, I lose. But the second trade, I come back in profit. So this is what happened on the second day, which is on Wednesday. And let's move forward. Let's see. So the second day, the first one is a lose. Second one is a win. So lose 1R, get back to R, a positive 1R for Wednesday. So what happened on Thursday is that there's actually 3 trades in total. And let's see on how am I doing my analysis. So the first thing first is it break the previous low. So the direction is bearish. Okay. So when the direction is bearish, it come back and retest. It make a break and retest here. So this is my entry. So this is the first trade, which happened here, a positive to R. And what happened is that I want to duplicate this one to here. Another break and retest, and it closed with a confirmation here. So actually this one is actually the same as the previous one. It's just that they break the different level and test on the different level. So I get into this position, and the second trade is a losing trade. This one. Then what about the third trade? The third trade is actually very similar when comparing to the previous one, because when it come back here and it make a resistance at this level. So you can see that on this level, there is a resistance, and it make a testing and closing back, just like what happened on Wednesday also. So I get in here again. This is also a fake break on the 30 minutes. So as simple as this, the third trade happened. So this is the 3 trades for Thursday. Let's see on what happened on Friday. Friday, actually, there's a little bit of incidents happen here. Let's see. Okay, so on Friday, it's still obviously a downtrend. A lower low, lower high, lower low, lower high. So what happened is that, let's see. When I check on chart, it's almost time here. Yep, all right. So what happened is, this is actually the first trade. Why am I enter on this level? It's because actually, if you check on the 15-minute, it's not a very good confirmation, but you can see that it actually break this level and come back for a retest, and it closed with a confirmation. So when this red candle is closed, I get in here right away with a stop loss just above the testing area. So actually this is still the same. It's just that if you just change to the 5-minute chart, then it will be much more clearer in that way. Okay, a break and retest, and it closed with a red candle. So I actually get in here and have a 1 to 2R. But I make a mistake here. So I only make a 1R instead. Why? It's because I become greedy and I didn't take any profit at the 2R here. And I'm actually aiming for more. And when it come back, it hit my trailing stop loss. So this is actually a lesson to learn, which we shouldn't be too greedy and look for more. If I just take the 1 to 2R, then this is another beautiful 1R for me. Okay, so let's check on what happened afterwards. What happened afterwards is when it goes up and it closes with another resistance here at this level. So I get into these positions right here. This, if I'm not mistaken. Oh, way after that here. So when it have the resistance here, it come back to break and closing back. So it tests for this resistance and it close back. So this is where my entry is. And I put my stop loss just above this red candle, and it get hit very unluckily, else this will be another beautiful trade also. So this is where I make the losses of 1R. Then afterwards, what happened is that I'm actually aiming for another break and retest at this level. See? At this level, I'm actually aiming for another break and retest. Let's see what happened here. You got to switch to another small time frame instead. So what happened here is that the market is very volatile at that moment, and it come back, it have a break and retest here, and I actually enter when it have another break here. So when it break, first one, it test for this, and the second thing, it test again and have a solid break at this level. And it come back to retest on that, and it closing back down. This is where my entry, and I will allocate my stop loss just above the testing area here, and make another 2R. So you can see that actually my way of doing things is very simple. First one, identify the direction. Second, look for the entry model, either long at the support or short at the resistance. Then another method of enter the trade is a break and retest. So as simple as that. So this is all the trade that I have made for last week. And for this week, I'm actually down for 2R until today. And right now it's actually having another resistance from here. This is very clearly that this is in a downtrend, whereby here is an uptrend, but when it break of this level, it make a shift of structures and become a bearish move. And right now, it come back and have another resistance from here. So we shall see what will happen on this area. So this is all of my last week case study. And for the lot size and everything, just a little reference. If you get in a standard lot, then $1 in gold will be equivalent to 100. If you get into a micro lot, then $1 here will be equivalent to $1. Standard lot. And micro lot. And $1 move this one will make the above one will make 100. And whereby the bottom will make $1. As simple as that. So you might need to adjust the lot size according to the stop loss, and do your own study on the lot size to control your risks. So this is all for my last week trade. So if you guys have any questions on the analysis part, you can tell me, and we will just go through it all together. Else, we will just go through the ending part real soon. And if you have any questions on how to get started on the CFD in Usmart, you can contact your manager right away. And this is where you can find your manager. Open the apps, go to the Me tab here, and then you can contact your design manager right there. And if you have any questions about the leverage, the margin levels, the risks, how to calculate the lot, this is where you can reach to. you can contact your manager if you have any question on that. So, and this is my personal contact. If you want to contact me, and please do not ask any stupid questions. We will only go through the technical analysis part. We will just go through the system, how to do the analysis. And if you have any question or want to consult on any stock, specific stock, you can do so. So this is my Telegram and this is my personal contact. If you don't have a Telegram, this is where you can find me. And you can add me through WeChat or WeCom, and this is my business contact. And lastly, this is actually the new Telegram group that we have formed. And if you have any questions in trading, feel free to ask that, and we will answer you right away. So if you guys don't have any questions, we will end this session right away and hope to see you guys again on next week.